From Greece to China to Puerto Rico, there is a lot of risk for investors to measure. Global head of managed investments and managing director for Citi Private Bank is with me now. He manages $60 billion. David Bailin is here. David, great to see you back.
Thank you so much. Thanks for having me.
So with all this volatility, how many extra phone calls are you fielding?
Yeah, we're getting a bunch of extra phone calls. We got more, I think, when we were dealing with both the Greece and China situations. And business was actually off in terms of clients investing money in June. And we've seen a pretty material rebound now in July as people have gotten sort of getting prepared for the fall and what they expect will be a growth period.
So, David, for people who don't know exactly what you do, you manage money for ultra high net worth individuals. Out of all of these factors, Greece, Portugal, China, something else that I haven't mentioned, and I said Portugal instead of Puerto Rico, which is the most concerning to your client base?
Well, actually, none of these are the most concerning. I think what really is concerning clients has to do with earnings and the continuity of growth and whether or not we're going to see continued growth in Europe, which we expect, continued growth in the U.S., which we expect, and whether or not China will be impacted by market volatility, which we do not expect. So that really is our outlook for the remaining 6 to 12 months.
So, David, how has your advice to your clients changed? So let's say right now where we stand versus a year ago, if at all.
Yeah, so I think that we're being very cautious about what's going to happen in the fixed income markets. Obviously, we're expecting the Fed is going to finally begin to raise rates with growth rates in the U.S. We see the energy market in the U.S. allowing for more income in the U.S., which should drive consumer spending, and that will be good for this area. And so we are substantially overweight in equities, about 6% more than benchmark, which is a lot for us.
It is a lot, and it's a lot in general because the S&P 500 has had something like a 7-year bull run.
That's exactly right. And we think that this is going to be extended for the next 12 to 18 months, and that we're cautious after that period of time, but this could be the longest expansion really in quite some time.
So you mentioned the Fed. Are you a September guy or a December guy?
Yeah, you really can't be the guy at Citi, but our view is that it's going to be earlier than later now, and that the data clearly supports a stronger U.S. economy, which is going to allow them to really act if they want to do so. All
right, David. Grateful to have you back.
Thank you so much. We'll see you in the fall.
Certainly will. David Bailin joining me there.